for tuning into Eggs Invest, your go-to source for practical, forward-thinking strategies in UK commercial property investment. You might ask, why should investors care about sustainability? After all, isn't a building just a physical asset? The truth is, it's much more than that. Going green isn't just a win for the environment. It's becoming a strategic advantage that can boost your returns and future-proof your investments. Let's start with green buildings and sustainable investments. Green buildings are designed to reduce their environmental impact. This means they use less energy, water, and materials, while creating healthier environments for tenants and visitors. This can include features like solar panels, efficient heating and cooling systems, LED lighting, water-saving fixtures, and even green roofs. Why should investors care? Because green buildings tend to attract better tenants, who are increasingly looking for spaces that reflect their values. They also often enjoy lower operating costs, thanks to reduced energy bills and maintenance expenses. And with stricter regulations coming into play, older, less efficient buildings risk becoming obsolete or face costly retrofits. Investing in sustainable properties also opens the door to various incentives, grants, and favorable financing options. Plus, many funds and institutional investors now prioritize ESG, environmental, social, and governance criteria, which means you could tap into a broader pool of capital. Which leads us nicely to ESG regulations in UK real estate. ESG regulations are evolving rapidly in the UK. The government, regulators, and industry bodies are pushing for higher environmental standards to meet climate targets. For example, the UK's commitment to net zero carbon emissions by 2050 means that commercial buildings must progressively improve energy efficiency and reduce emissions. One key regulation is the Minimum Energy Efficiency Standards, MIS, which currently requires all rented commercial properties to have an Energy Performance Certificate, EPC, rating of at least an E. From 2023, this minimum standard rises to AC rating for new leases, making energy efficiency not just a nice-to-have, but a legal requirement. There's also growing pressure on transparency and reporting. Larger companies and property portfolios must disclose ESG data and demonstrate responsible governance. This trend affects lenders, investors, and tenants, who all demand accountability and clear sustainability strategies. So, as an investor, staying ahead of these regulations is crucial, both to avoid penalties and to future-proof your assets. This means conducting energy audits, planning for upgrades, and incorporating sustainability into your investment criteria. To wrap up, sustainability and ESG are no longer optional extras in commercial real estate. They are shaping how properties are valued, financed, and managed. Smart investors who understand and embrace these factors will be better positioned to benefit from market shifts and regulatory changes. Next time, we'll explore property management, how to keep tenants happy and your building running smoothly for long-term success. And this is Eggs Invest, where smart investing meets smart thinking.